Hello, everyone. Welcome to another episode of the Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
What's good, man? How you doing?
Man, haven't seen the market today. That is some ridiculous stuff happening.
The after hours right now, crazy.
Bruh, we're gonna see some gap up tomorrow in those indexes. But the major U.S. equity indexes all close at fresh all-time closing high. Like S&P is up there, Nasdaq is up there. The only thing that got smacked today was the Dow Jones IWM because with the rate cuts not being factored in September anymore, yeah, we saw some decline there. But overall, all the major indexes kind of close a little high today. You know what I mean? And then I know we're going to talk a little bit about the Meta and the Microsoft earnings. I mean, go look at that chart, people. Go look at that chart. That is some ridiculous stuff. You know what I mean? And then we'll talk a little bit about what Jerome Powell talked about. You know what I mean? Jerome came in there, he didn't say much. There was nothing.
He didn't
it's,
he
it's
didn't say nothing new.
it's more
And
like, yeah, we ain't doing nothing.
and I saw that some people were trying to bait him into guaranteeing that a rate cut was coming in September.
Jerome is not letting it. Nope.
He knows how to Euro step those questions. I
Yep.
commend him. I commend him for that
that's
because
that's a good way to
even though
describe it.
even though the summary of economic expectations, right,
Hmm.
have two rate cuts priced in, he didn't want to say that, oh yeah, because we had that in our projections that we're obviously going to cut rates in September.
Yeah.
He was like, that's not how we function. We got to
Yeah.
look at the keep looking at the data. Once we get to the meeting, then we'll make a decision.
Pretty much. Pretty much. I mean, they pretty much said that they're gonna leave the benchmark rate at 4.25, 4.25, and 4.50 and change. And this is like the fifth meetings that nothing happens. You know what I mean? Like they didn't even like, yeah,
Since what, last meeting in October last
yeah,
year?
last year.
That's the last time they changed rates.
Yep. They like, we're not doing anything basically. So as soon as that happened, you can see like we see a SPY drop, QQQ drop, Dow Jones, everything just dropped, right? Because based on that one. But I mean, if you look at after the market after hours, those probably gonna come back tomorrow. I mean,
because of
big
that
time because of the tech
because of
earnings.
the tech earnings. Yeah.
Mm-hmm.
So,
Mm-hmm. Yeah.
but the thing that I hate is everybody's talking about how Jerome Powell and the Fed is doing a bad job, right? They're saying they're doing a bad job.
Yeah.
But let's be 100% honest. Where has inflation gone since the Fed started tightening? They did what they needed to do
Yep.
to get inflation down. So
Mhm.
you can't say you're doing a bad job, but inflation has come down.
Right.
Those two can't go hand in
They
hand.
don't go hand in hand.
They
No.
don't go hand in
No.
hand.
No.
Are they perfect? Have they got everything right? Obviously not. But as I said before, there is more danger in cutting rates and then having to re-raise rates than holding rates and then maybe cutting a little bit too late. It's the
Yep.
lesser of two evils.
Right.
Now, let's also be 100% honest. Everyone's saying that the Fed is too restrictive, yet the market has been able to get to all-time highs. You've got Microsoft and Meta who have now put up a blowout quarter in a economy that's supposedly too restrictive.
Mhm.
We have 4.1% unemployment. So is everything rosy and is everything robust in every part of the market? No. But for the most part, they've done what they can based on what they can control. They can't control tariffs. They can't control whether companies are going to eat the tariffs or pass it to consumers. But when
Mhm.
it comes to their dual mandate, price stability, full employment, I think they can say that we've done our job on those two fronts. We just want to make sure that it stays that way. Can't complain.
Right, right. And I think like people sometimes misunderstand what the Fed actually does. So
Correct.
they don't really have an idea of like they're actually doing their job, right? So when you hear, the president's office saying like he should cut rate, he should cut rate, he should cut rate, you really got to understand what the Feds are doing and why they're like very cautious about, following what the president is talking about, right? So it's like it's very, very sensitive, very, very sensitive. Um, the other thing I was gonna say is Jerome actually mentioned that higher tariffs is likely going to be passed through to consumers. I mean, we've been seeing that, like slowly and gradually, we are seeing that those numbers maybe starting to creep up a little bit into the GDP numbers and all that stuff. So, I mean, is that something to be worried about in the long term, or is we probably going to feel it in the short term and then disappear from there?
So they're saying that they're expecting the tariff effects to be more of like a one-time price shock, not
Mm,
something that's going to stay in the system for a long period of time. Now, one of the things that's also kept inflation relatively low is if we look at the inflation in the services sector, that number has come down. The goods sector, there is still some inflation showing up in those numbers.
mhm,
I don't expect companies to eat tariffs for the next 4 years or for the next 2 years, right? At some point, there could be, you know, price hikes, maybe not something major, but there could be price hikes that people will start to see, right? Again, a lot of companies are trying to get a little bit creative about how they spread prices across their goods and services without giving everybody like sticker shock. So, because that could still happen, you don't want to be too presumptuous and cut rates. And then all of a sudden, you see inflation in places you didn't expect, and then you got to reverse.
yep.
Like backpedaling is going to do way more damage than just saying, let's just hold rates
Facts.
where we are. Now,
Facts.
let's just say if unemployment was getting to like 4.4, 4.5, 4.6, right? Then I would say, okay, maybe you need to start cutting rates. But we've held steady at 4.2. We went down to 4.1. That's not a problem there, right?
Yep. Right.
So full employment, that mandate, they can check that box. Inflation has come down, but there is still the potential that it could rear its ugly head in other places that they're monitoring, whether it's long term or short term. They don't know yet, and they don't want to make those assumptions too
Right.
soon.
Right.
So I kind of commend him for standing his ground because, from an economic standpoint, to me, it makes sense. So I'm with them holding rates. You also got to understand too. A lot of people are complaining about mortgages. Like
Hmm.
get this out of your head. Mortgages are not tied to the Fed funds rate.
Nope.
Let us be 100% clear on this. And I will go back to last year. So remember, what did we do in September? We cut 50 basis points in September, right? And then in October was another 25.
Right. Yep.
Mortgage rates went up
Yep.
after that. So stop blaming the Fed for the mortgage hikes because the Fed only controls usually anything with 2 year maturities or lower. So that's like your credit card rates, um, your auto loans, your savings account rates. Those are usually more sensitive to Fed activity,
Right.
not mortgages, not commercial real estate loans. No. So when people talk about, when Trump's talking about, oh, people can't afford mortgages because the Fed won't cut rates. Well, they cut twice last year and mortgages
And that,
went
yeah,
and
yeah.
rates went up.
Right. And you even heard people were excited about the cut. They were talking
People
about,
were
oh my
excited.
God, this is good. This,
People were excited. I'm telling you, my mom's in real estate, and she had customers asking her like, "What happened? Like,
hmm
why didn't we get better rates on our mortgages?" And it's because the Fed doesn't control. The 10-year yield is usually what mortgage loan lenders use when it
Yep.
comes to setting their rates.
Yep.
That part of the bond market moves based on supply and demand.
hmm
That's
hmm
that's 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 the that's how it moves.
Yep. Yep.
So
And
I
speaking
don't
of
know.
that, it ticked up a little bit today. So
It did tick up a little bit today. It did tick
see,
up a
home
little bit
mortgage are
today.
gonna go
So
back up.
I mean, if you want the long end of the yield curve to come down, I mean, we just need a more fiscal responsibility. More, I mean, we need a
Yep.
government that's more fiscally more responsible.
Yep. Yep. Yep.
Because when the long end of the curve that's tied to treasuries, when the rate goes up, it's basically part of it is not only supply and demand, but it's your the United States is losing a little bit of credibility, and their credit rating is drifting,
Yep.
right? If you have good credit, people are going to want to lend you money at a lower rate.
Mm.
So if your credit rating is better, you can borrow money at cheaper prices.
Yep. Yep.
But since we don't have a fiscally responsible government that continues to increase the debt ceiling, this is kind of what happens with the long end of the yield curve. So,
That's what I mean.
but
But
that's
I also I really think people need to go back to like economic class, maybe like history class, right? It's like the US does borrow money. So when you think about the T bills, the T notes, the T bonds, all of those stuff, those are all debt being issued for other people to buy in order for us to get money, right?
exactly
So it's like you guys gotta understand, it's like when we raise our, debt ceilings and all that stuff, all of those things impact everything.
the long end of the yield curve. Correct, exactly. And as long as you continue to spend, I got a very clear picture of this on my IG story if you want to go check it out. So long as you continue to spend more than you bring in,
Mhm.
you're gonna have to issue debt.
Yep.
And I think the projection for how much debt that the government's gonna need over the next year or so, I think they said that they misestimated by 185 billion. So they're like, we need 185 billion more based on our projections. So you using tariffs to increase revenue, but then you cut taxes, which decreases revenue. So to me, you're kind of in the same place you were.
You're in the same place. You just literally just switching pockets basically.
Just
Like,
switching pockets.
yeah.
You're just switching pockets.
It's
So
like
I mean,
you take $10 from one side, put it on the other side. You
you
still got
robbing
ten
Peter to
dollars.
pay you robbing Peter to pay Paul, right? So I don't
That's
know.
crazy.
I just I laugh when I hear like people who should know better talk about blaming like the mortgage rates on Jerome Powell. And I'm glad that he stood up there and was like and said that today. He was like, "Yeah, we don't. Do we have an effect a little bit? Yes, but no, not really.
Yeah,
Because
not
like I
really.
said, what happened in September? We cut 75 basis points and mortgage rates went up.
Hmm.
So
Hmm.
that should shut that whole debate down immediately.
But it wouldn't because people don't want to do research. It's not going to shut it down. People are still going to
And
have the same
that's
complaints.
that's what happens with a lot of topics these
Yeah.
days.
The other, the other thing that was interesting to me is like there are two people within the Feds. I think it's Christopher Waller and Mike and Michelle Bowman. They both voted
To
to
cut
cut
rates.
rates.
Yep.
I was like, all right, Jerome, what's going on in your camp? Get it together. But I don't understand, like, are they are they succumbing to the pressure from the administration, or are they like seeing something different? You know, understand what I'm saying? So it's like I'm not sure what's going on there.
Yeah. I mean, I'm pretty sure there's varying opinions. I mean, you're not going to have everybody on board, right, at the same time. So I don't know. We'll have to wait and see about that. But I think today's Fed meeting went as expected.
Mm-hmm.
And at this point, like I said, they're just going to have to keep looking at the data. We get PCE what tomorrow?
Tomorrow.
Yeah, we get PCE tomorrow, which is their preferred gauge of inflation, and we'll see what that says. And then we get jobs
Yep.
report Friday.
Yep.
So, man, it's been a jam-packed week.
It's
Sheesh.
been a jam-packed
And then
week.
we got GDP today, 3.3% growth in the second quarter. That's the
Yep.
first reading.
Yep.
Yeah.
Yep.
So, so to me, again, if the Fed was super restrictive, how do you get 3% GDP for the quarter?
Exactly.
Let the man
But
do
th-
his
but that's
job.
but that's but that's the thing I'm saying. Like I think people don't understand how first they don't understand how America works or America economy
Oh,
works.
that's
You know what I
that's
mean?
nice. I agree. I
I
agree.
think I think people when people say stuff, they say it out of emotion and
Hmm.
just listening to somebody else who might they think they have
Somebody
better like
somebody loaded up on 10-year bonds a couple months ago
exactly
and they're
exactly.
underwater.
Yep. So they come in
Yeah,
here and complain and all that stuff. You know what I mean? It's
that
like
might be it. That might be it. Yeah.
yeah, I'm telling you, man, knowledge is power in this country. If you learn how this country works, you will learn how money is moved and all that stuff and be able to be in a good position. But Let's move on over to Meta and Microsoft. Let's run through some numbers here, man. So Meta
My goodness.
platforms
My goodness.
reported earnings after hours. Adjusted earning per share is 7.14, $7.14, up 38% year over year versus Wall Street estimate. Listen to this. The Wall Street estimated to be $5.85 to $5.89. They beat that thing out the water. Like
And if
crushed
anybody
it.
doesn't know, and anybody doesn't know what earnings per share is, that's bottom line profit. That's profit. That's not revenue. That's
This is
profit.
right.
Earnings per share. So when they talk about top line beat, that's revenue. When they talk about bottom line beat, that's profit.
Yep.
So to beat by that much, Mark Zuckerberg,
My man,
aka Thanos.
listen, they beat the stock market. The revenue is up 22%. They're up like $47.52 billion. Like that's crazy.
That's in a quarter.
Yeah, and the estimate was around $44 billion. So that's ridiculous. You know what I mean? Um, what else? The user advertising strength, daily active user grew by 6%. I'm still surprised people are still
I'm
signing up
surprised. I'm
for
surprised.
Facebook. Like, who
I'm
else is
surprised.
there? Who else is not using Facebook at
Whose
this point?
grandma and auntie is just getting to Facebook? Like
Oh man, they grew up
it's
by 6%.
it's crazy that almost half of the world population is on it.
3.48 billion people are on
That's
Facebook.
crazy.
But it
Crazy.
makes sense, right? Because ever since they bought Instagram, right?
Yes.
Because there were some people that was on Instagram not necessarily have Facebook, but now you combine that 3.448 billion people are subscribers to Facebook. Even if you get $1 from these people, shoot, yeah.
Can you imagine going on Facebook and just saying everybody just send me $1?
Just send me $1. That's it.
You know what's crazy? Imagine everybody on Facebook just like crowdfunded $1.
Yeah,
Like everybody crowdfunded $1.
literally. If you,
That's $3.8 billion.
yep, just $1.
Hey man, let's start that idea and then
I'm
let me manage the
serious.
money and then we'll distribute it as
Yes,
needed.
that is not a bad idea. I'm serious. You know what I mean?
Everybody
So
send me $1.
just send me $1. Just send me $1.
That's
Um,
crazy.
so the stock rose about 12% after hours. Go look at that chart. I mean, it is a straight shooter. It hit the high like 780 or something like that.
Yeah,
It is a
seven eighty
straight
one.
shooter. You know what I mean? Now, of course, Meta has been doing some crazy stuff, poaching different people from different companies, from Apple, poaching people from AI. What's it called? What is it? What's his name's company?
Open AI.
Open AI. They're just poaching people from everywhere. If you are able to do research or understand machine learning and all this stuff, they're paying you money. So it looks like it's paying off. So
And the thing is, they're probably just getting started.
that's the thing.
They probably just getting started.
That's the thing. Like they literally just got these people, like literally within the past 60 days. So imagine the stuff that they're gonna come up with over the next year or two. That's gonna be nuts.
Crazy.
That's gonna be nuts.
Shout out to Mark Zuckerberg, man. I mean,
The boy been
every
playing dirty since college.
I mean, I'm just looking at the stock chart over the last. I mean, Facebook was during the Liberation Day. Facebook got down to 479.80, and you just go look at the
That's
last
crazy.
2 months. My goodness,
That's crazy.
crazy, 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 crazy.
That's ridiculous, man. Like I don't understand how he's able to accomplish all of that in such a short time. But
Yep.
let's move on to Microsoft. That's another stock. Go look at that chart. Go look at that chart. Their revenue is up $76.4 billion. That's 18% year over year, beating expectations. Earnings per share, $3.65. The Azure cloud revenue hit 75 billion. Azure by itself hit 75 billion. They're up 34%. Like Azure. If you don't know what the Azure cloud is, go look it up, please.
Yeah,
I mean, it's crazy.
that's their cloud program.
Right. I
Man,
mean, The stock is up over 7% after hours. That's crazy.
Yeah, that's
You
another
know?
all-time high.
Yep.
Yeah. So as we look at all of these mega cap um, companies, kind of, you know, you get to $3 trillion valuation or 1 trillion, 2 trillion, and the thing is, okay, how do I get to the next trillion? How do I get to the next trillion? I mean, these folks have been able to figure it out.
Yep.
And if I'm not mistaken, I don't think Microsoft would have got here under the leadership of Bill Gates.
No.
Don't think so.
No.
Um, Handing the
Bill
company
Gates'
out,
focus was different. He was
yes,
focused on something else. So
yes. So getting to this, getting to this stage after all of these years, I mean, is impressive. And if I'm
mhm.
not mistaken, I don't want to, I don't know, but if Tim Cook can't figure it out, maybe there's some new leadership that needs to happen with Apple because,
ASAP.
like, let's if
ASAP.
we're being honest, Apple has been stuck in the mud for what? To me, I'd probably say like 2, 3 years,
Yep. Unless it is secretly working on something.
unless they secretly working on something we don't know. But when we look at
Yeah.
what is, I mean, they don't have an answer to AI. They don't have an answer.
Unless they're secretly working on it. That's the only thing I can think about. Because
I
in
mean,
no way you that big of a company. You see AI is being involved in everything and you do
like,
media.
go buy somebody, do something. Yeah, I don't know. Maybe, like I said, maybe they will figure it out. But I will say this again: Apple is not a growth company no more. They're not a growth
Mhm.
company.
They
No,
can be though. Like I still believe they can be, but it's just like they have to come up with something.
they got
Like
to
they
come up
lit.
with something. You can't. To
Mhm.
me, you can't. You're living and dying by this phone, and the only thing that you're doing to the phone is
Mhm.
changing the camera.
Yeah, they need to move
Like,
away from the phone.
like that's all it's been. It's like camera upgrade, camera
Mhm.
upgrade, camera upgrade, camera upgrade. Okay,
They
we
need,
get it. Like we get it.
yep.
And even
They,
then, the camera's still not better than Samsung. Like I don't know, man.
yeah, yeah.
I've lost interest in Apple, but maybe I'll be wrong.
Yeah, I hope so, man, because they're a great company, to for them to just be like a slow moving turtle like this is, it's not a good thing.
Yeah,
But if you look at both companies, Microsoft and Meta, they're both heavily spending on AI. So you can see the optimism behind that. Now, let's think about this realistically. I mean, is this overhyped for now? This is just optimism based on what they're gonna come up with. I
correct.
don't
Yeah.
know. You know what I mean? So would we see a pullback, and then be able to adjust back to like the real price? I don't know. So, we've seen this over and over when the stock runs like that. Some people sell, stock goes back down, gets priced in whatever the investors think it should be pricing at, and then it start moving again.
Another thing too is like as you continue to put up these types of quarters, just know that the expectations continue to get
Yep.
higher. Like we
Yep.
saw what happened with Nvidia. Like Nvidia got to a point where the expectations got so high, they would have good quarters, but investors wouldn't be that impressed, and the
Yeah.
stock would sell off. But
Yep.
eventually,
Goes
they'd
back
figure it
up
out,
again.
and it would come
Yep.
back. So
Yep. Yep. All right. It is almost the half hour marker. Let's go ahead and dive into that circle analysis that you're gonna do. So let's go ahead and do
yeah,
that.
so every Wednesday we'll be doing a deep dive into a stock of your choice, and I put out a poll, and I got a couple of answers that came in, and I drew a name out of a hat, and the name I drew for this week is Circle. So we are going to dive into Circle's analysis.
Let's do it.
Let me pull up my notes. So I will say this, Circle, because they're a recently IPO'd company, there's really not that much data. Like there's not any most companies that have just recently become public, there's really not that much data. So I had to do a lot of digging, and I'll go over some of the things that I found. So Circle, the information that I have is based on close of July 29, 2025. So, Circle, let's give you an overview of their business model. So, Circle operates a platform and network for infrastructure for stable coins. Primarily, their main stable coin is USD coin, which is USDC, and they provide tokenized funds, payment rails, developer tools, liquidity services for blockchain applications. They get most of their revenue through issuance and management of stablecoins, transactions and integration fees, interest on reserves, and enterprise licensing slash crypto services. Most of their customers, who are they? Crypto exchanges, institutional investors, payment platforms, e-commerce merchants, fintech developers, and token issuers. Most of their payments come from transaction fees, interest income based on the reserves for backing up the USDC coin, developer integration fees, and token issuance and licensing. Their key competitor, Tether, it's one of their main rivals, as well as other crypto infrastructure firms like Coinbase and Ripple. So if you are a investor in Circle, it's always good to know who your competition is because they always talk about moat. What is your moat? What separates you from allowing your competition to take market share of your business? The wider the moat, the better. So that's one of the things you always want to understand when you're looking at invested in individual names. Let's talk about their revenue. So they had a revenue growth from first quarter 2024 to first quarter 2025 of 58.5% year over year. So that's what you call a hyper growth company. They're in a very high growth stage. They had $578 million in revenue for Q1 2025. Full year revenue for 2024, looking back, it was $1.68 billion, which was up 15.6% from 2023, which is $1.45 billion. Based on this year's current run rate, they should close 2025 with about $2 billion in revenue for the year. So you can see year over year increase in their top line growth, which is usually what you want to see with hyper growth companies. Now, when it comes to profitability, they're a new company. They're in a hyper growth stage. So you're probably not going to see a lot of good metrics when it comes to profitability. But let's just look at things that I think are important for hyper growth companies. Like net profits aren't as important because they're going to probably be reinvesting a lot of their revenue back into the business. So they may not be net profitable. But what you want to look at is things like gross margins, right? Operating income, things like that. So let's take a look at that. So gross profit margin in first quarter 2025 was 26.8%, which was up from Q1 2024, which was about 26.6%. So relatively pretty good. But again, early growth company investing a lot in the business. This is probably not going to be as robust. Net income, their net income is not that good. I think it was 18.11 million on revenue of 1.89 billion. So what does that tell you? There's not a lot of money left over at the end of the year for them to like do other projects. Most of that revenue is probably going right back into the business. So net profit, probably not a good number to gauge an early growth company in its beginning stages. Free cash flow, negligible because again, the statistics for the business are not established. They have not, been a public company that long. They're still growing. There's still a lot of things that they need to get through before they get to being a very stable and profitable business. Now, PE ratios, very, very high. So expensive company. If you're getting into Circle now, you're not getting it cheap. So EPS 2,424, which is ridiculous. But if you look at forward PE, I said EPS, PE and is 2424. So that's pretty high. But if you look at forward PE, it's 153 times revenue. So you're paying a lot of money to get into this type of company. Look at it this way. You're basically paying $153 for every dollar of growth. That's how I would look at it, which is expensive. But again, hyper growth company. So you expect these things from companies that are growing at a fast pace that aren't really that profitable. Now, one of the things that I always want to look at with hyper growth companies is, are they heavily leveraged? Do they have a lot of debt? So Circle debt to equity ratio was 0.07, indicating very low leverage as of the end of 2024. That's a good thing for a growth company, not being heavily levered. Current ratio 1.02 and a quick ratio of 0.2. So basically, total liabilities are minimal relative to their millions in cash reserves, which they need to back up their USDC coins. And they also have substantial assets. So assets and liability balance, pretty good for a company that's in its early stages. Operating margin, gross margins are 26 to 27%. Net margin is very small, again, about less, approximately 1%. Most analysts, if you look at their ratings, have a hold on them. They're like, let's just wait and see, right? We're not going to say buy here because you might be able to get them at a cheaper price down the line. But overall, it's hold. So I would say in summary, Circle is a very, I'd say fairly stable company. I think $43 billion market cap right now, which is, pretty decent. But as an investor, if this is a company that I want to hold long term, I personally would probably wait for a better entry point, right?
Mhm.
That's how I would approach this. Now, I may not get it because I remember what I said about CoreWeave, right? I was like,
Yep. Yep.
I want CoreWeave to come in at $30. It got down to 33, and I was like, I'm gonna wait till it gets to 30. That thing just took off. But will I get another opportunity down the road? Who knows? I don't know. But overall, like I said, I think that Circle's a good company. There's not a lot of data to look at based on their, recently new IPO. But I would personally wait for this thing to come down a little bit before I hop in it. But um, the stable coin adoption and the explosiveness of that part of the business with crypto and stuff, from what I'm hearing, it's got legs and legislation is behind it as well. So
Yep.
we'll have to
The
wait and
Genius Act is coming up.
exactly the
So
Genius Act. Yeah. So we'll have to wait and see and see how Circle does when whatever they got going on, all the tokenizations and things like that start to take off. We'll just have to wait and see. So
yep. Yep.
yeah, but I think Circle went from what, $64 not too long ago.
Yep. Go look at
But you
that
can,
chart.
yeah, it hit a high of almost 300, but now it's back to 190. So you can kind
Hmm.
of see what you're in for if this is an investment you want to get into. You're going
Yep.
to see some wild swings. So this is a company that if you're an investor, you probably want to buy gradually on like down days. If this is like a company that you want to be a part of, when you see really, really red days, maybe you can pick up a couple shares.
Yep.
So,
Yep. Yep.
but
I
this is
mean,
a this
we
is
came.
this is a volatile stock.
Yeah, we came down from 298 to 190, so almost
Yeah.
$100 down. But
And what,
yeah,
like a month?
in a month. Yeah.
In like a month. Yeah. So, and right now the technicals, I wouldn't say it's bearish or bullish. It's kind of neutral right now from a
Yeah.
technical standpoint. So,
I think they're waiting for the Genius Act to be passed, and I
hmm
think we're probably going to see another move up to the upside. So, yeah, I think that's probably going to be their next catalyst, at least in my opinion.
correct. And I
So,
always say this from an investor standpoint, right? You always want to invest in places. If you're a growth investor, let me just put it to you that way, because income investors, they look at different things. If you're a
yep,
growth investor, you want to invest in where the puck is going, like where is technology going, where are the innovations going, and stable coins look like that's something that's going to be sticking around for quite some time.
yep,
So if they're going to be playing in that sandbox and they're going to be a leader in that space, then you want to be a part of that ride. Now you also have to understand who their competition is. Coinbase, Tether, Ripple, right? They kind of all play in the
hmm,
same space. So again, you want to do your research around, okay, what makes Circle so unique that they can beat the competition?
yep.
So
And plus, you still got to think about the other ones, right? So now that crypto is being adopted a lot more, I mean,
hmm
PayPal might start getting into that area.
hmm
You're thinking about Visa, Mastercard, they might start getting into that area. Like all those different Square might start getting into that area. So like there might be a little
yeah.
bit more
There
competition
you got
coming
you
up.
got more players coming. Yeah, so it's,
Hmm.
it's possible. So again, that's why I say you always want to look at moat, right? So, what makes them so unique where they can defend their business from other people taking market share.
Yep.
And, you talk about companies like TSM, you're like, okay, what's TSM's moat? Well, TSM's moat is you need production of chips They
Yep.
they the 800-pound gorilla in the room, right?
Yep.
NVIDIA's moat is that they're the one that are building the Blackwell chips and the AI infrastructure that everybody seems to need. So
Mm,
those things is how you look at moat when you're looking at a business that you want to invest in. But I think Circle, you look 5 years from now, I think they'll be in a good place. But
yep.
would I buy at this price personally? No, I would wait. That's just me.
Yep.
But
Yep.
I could miss the boat. I'm okay with that.
But that was a good breakdown of the circle, man. So every week, every Wednesday, we'll probably do on something like that. So make sure you guys send us your suggestions. If you want something to be looked at, if you want us to analyze something, please let us know. But
Yeah.
we'll help kind of look into some of those numbers, give our feedback, and you go do what you need to do.
Yeah, so I think a couple names that I got that we'll look at next week. I just draw these randomly out of a hat. SoFi,
Mm.
ASML, Airbnb, Campbell Soup, Costco, and SoundHound
Campbell
AI.
soup. Who wants to look at Campbell soup?
Man, one of my homeboys said Campbell Soup, so he must be in it. So we'll take a look. We'll take a look at Campbell Soup, but that's a real basic business.
Right. It's I mean it's been solid, it's been solid. It's one of those,
Yeah,
blue collar type of
yeah.
business. It's just like,
If I
yeah.
if I'm looking at Campbell Soup is a company where you probably are not investing it for the growth. You're
Do they pay
probably
dividend?
you probably they might pay a dividend. I don't see. Yeah, they do pay a dividend. They just paid
Okay.
one on 39 cents a share on
Okay.
733. But if you look at where the chart is going, chart's going down. Chart's been went from $43. We're now down to 29.39. Now, does it? I don't know. I haven't looked at their earnings. I haven't heard anything from them. But if you look at where most of the money has been pouring into the market, companies like Campbell Soup usually do well when there is people are scared, right? Sell-offs, bear markets, because people gonna need soup. Like always gonna need
Mhm.
soup.
Mhm.
In a hyper growth environment, like we're in a growth economy right now. We're in a bull market.
Yep.
People want the tech stocks. They want the high beta stuff. Nobody wants
Yep.
Campbell Soups in this type of
Yep.
environment, right? So
Yep.
that's just how that's how the cookie crumbles in this type of market. So
Yep.
if we get a bear market for an undisclosed amount of time, let's just say a couple months, we get a recession, Campbell Soup might be able to resurrect
Yeah.
itself. But right
This is
now,
this this is one of those companies that you just buy and forget about it. If
yeah,
if you
and
really
you
if you
just
really yeah, if you're really interested in it, just buy and forget about it.
yeah. But this company's now if they get bought out, maybe that's another thing that
I'm surprised they're not bought out. That's crazy. I'm surprised they
yeah,
still operate as an independent. That's
yeah.
crazy.
This stock has gone down since 2016. It's been going down.
Yep. Yep.
So
But yeah, we'll break some more down next week and let you guys know. If you guys want to send some more, please let us know. We'll post it on Instagram, and you guys can give us some suggestions. But let's talk about this week. I mean, Thursday we have tomorrow, Thursday, July 31st. Dang, 31st is tomorrow already. God dang, August 1st. Hey, you guys gotta remember also the deadline for the tariffs. We haven't heard anything about it yet. Whether it's gonna be extended, whether it's gonna be so it's coming up. So tomorrow, or maybe even the first, we'll see what the administration said. So keep an eye on that one. But we have PCE coming out tomorrow, 8:30 a.m. Eastern time. That's the federal preferred inflation gauge. So let's see how that looks like. And then on Friday, we have the employment situation. We have the non-farm payrolls coming up, unemployment rate, average hourly earnings, participation rate, all of that stuff is coming out all at 8:30 a.m. Central Eastern. So we'll see how that goes. Next week, well, I guess we'll save next week stuff for Friday. We'll talk about Friday, all the stuff that's coming next week. But other than that, man, I don't know if anything else you want to cover.
So one thing I want to touch on, we talked
Mhm.
about this going into 2025. What did we say about mergers and acquisitions this that would start happening? We're starting to see that pick up.
Yep.
So we had the two train companies, Union Pacific and I don't know who the other one is, but they merged.
Mm-hmm.
So that's something that I guess we'll have to go through the whole approval process. I'm pretty sure it will. I think that's all the ones that got blocked are probably
Yep.
are
The,
probably going to go through.
all the
Um,
airlines. There was a
we
lot of
had
airlines that got blocked.
we had Palo Alto Networks by CyberArk.
Mm-hmm.
I think I don't know what the valuation was, but they spent a good amount of money. I keep saying this. Cybersecurity, there's going to be lots of mergers and
There has to
acquisitions
be. There has to be
in that
consolidation.
space. There has to
Yep.
be consolidation. There has to be. There's just too many. It's
Yep.
too many.
Yep.
And I will say one that is probably an acquisition target because the stock price has just been getting beat up. I'm gonna give you one. I could be wrong, but we'll see. Fastly.
Oh yeah.
Fastly used to be a $25 stock way back in February 2024. They're now down.
Ooh,
They're now
boy.
down to about $6.85.
Sheesh.
So if I'm a company that's looking to acquire,
That's a target right there.
I'm looking at your valuation's pretty much been cut by more than half.
And the
So
market
if,
cap is only 990 million.
yeah, it's dropped.
Sheesh.
So Fastly, I don't know. They got earnings coming up. I think when is their earnings coming up? Uh, April, no, August 6th. You get a company that is pretty much getting smacked. Their valuation has been pretty much destroyed. They could be an acquisition target. I don't know by who, but they could be an acquisition target because I think the big players in this space are CrowdStrike and Palo Alto right now. There's probably
Mhm.
still a few more. Datadog's probably another big player in that
That's
space.
another one. Yep.
MongoDB, no,
Hmm.
MongoDB software. I don't know if they do. Do they do cybersecurity? I don't know. Um, but there's going to be a lot to me. I think there's going to be a lot of consolidation in this space. I don't know. Let me go to CyberArk.
Yeah.
CyberArk. Yeah, CyberArk stock went to what, 452 a share based on that acquisition. So keep an eye on that. There's going to be a lot of consolidation in
Yep.
this market. So just keep that in mind.
And
And I
I
think
was actually reading that it says historical speculation only. It said over the years, Fastly has been considered a takeover target by various tech players. Cisco, Google, Oracle have all been floated in speculative as a company that might take over Fastly. So I mean,
I
they
think it's just
might,
a matter. I think it's just a matter of time. They need a
yep,
lifeline. They need
yep,
a lifeline.
pretty bad
So
because
yeah,
this
they need a
stock is
lifeline.
getting beat
They
right
need a
now.
lifeline bad. And if they can be acquired for what? If you're under a billion now, somebody throws you what, $3 billion, you're probably gonna fold.
Like, yeah, just take me,
Just take me,
give me, get me out of here. Investors
get me
probably
out of
like,
here.
just pay us our money. We need to
Yeah,
get
just
out.
pay us our money. Let's just get out of here. Stop the bleeding.
Yep, yep,
So
yep.
yeah, I'd put Fastly on a takeover on a potential takeover
You
list.
heard it here first, y'all. You heard it here first.
Remember, you heard it here first.
We're gonna put a timestamp on this comment right here.
I need to put that on a t-shirt. You
Yeah,
heard it here
throw that on a
first.
t-shirt.
I need to put that on a t-shirt. Start selling merch.
Seriously, man. Well, the other thing I was gonna bring up, one of the fun things that we just learned. I think we talked about this last year. Southwest is actually starting January of next year. You're gonna be able to reserve a seat. There's no
Hmm.
longer, there's no longer pick a seat, whatever. There's now assigned seating. So we'll see how what that does to their business. But I think it gives them the possibility to be able to do premium seatings and all the stuff they couldn't do right now. Like, what I mean, like, upgrades and all that stuff. So
Yeah.
we shall
I-
see.
I'll say the only thing that I like about that is that it'll be easier for families to sit together because
Yes.
I usually fly by myself. So I'm a lot of times you got a family that's like separated and they'll be like, "Sir, can you switch seats so that," and I just
Yeah.
be like, "All right, man. All right,
Yeah.
man." So
Yeah.
I think that's a good thing that families can actually pick their seats and sit together.
Yeah.
So but we'll
Yeah.
see how it affects their business.
Yeah. But other than that, this is a wrap, y'all. Any last minute advice for next week or coming up to finish up this week at all?
No, I will say, man, uh tech continues to be the leader. It
Yes.
continues to be the leader. Um,
Yes.
I will say this at some point, right? Investors will want to see the results from all of this spend on AI, right? So again, the bar is going to keep getting set higher and higher and higher.
Yep.
as these companies continue to grow and spend all this money. Um, but yeah, we didn't talk about Amazon. Amazon actually looked like they put up a good quarter, and its stock
Yep.
was also up at the end of
Yep.
the after hours. So yeah, if technology is where things are at, value companies are doing right. I'm just sitting here because I worked for a firm where they were like value tilts, value, 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 value. And I used to just sit there and be like I get what history says
Yeah.
because
Yeah.
when I took my SEMA license, right? Value basically has outperformed growth on what we call like a risk adjusted basis, right?
Mm,
So a lot of financial firms and a lot of financial institutions will like they stick by that. Like we don't want to overpay and blah blah blah.
yep.
But to me, if you see a company that's being innovative, you see a company that's leading the charge of where the world is going into the future, I don't care what I'm paying for it.
Right.
Like if it's a long-term investment, well, I want to be a part of that.
Yep. Yep.
So
Yep.
I
But then
hope I
again, we're also in the age of AI too. There's like this is the age of
correct.
technology right
Correct.
now.
This
So
is
it's like
yeah,
as
it
an
is.
investor, you gotta. This is what we always teach. Where is the money going? You gotta
Exactly.
start positioning your money into that direction. So
And the way I see it is if these companies can do this in an interest rate environment where borrowing capital is fairly expensive, what do you think is going to happen when borrowing capital gets cheaper?
yep. Yep.
So,
Absolutely.
yeah, let me got a couple comments. I'm going to miss getting a B boarding section, and I'm going to try to get a seat in the emergency row for Southwest. This is yep, perfect. We'll appreciate making these videos. Yeah, QQQ calls, man. If you've been in QQQ calls, or if you're in the S&P 500 index, or you're in VOO, or you're
Yep.
probably having a
Yep.
really, really, really good investment year. So
Yep. Yep. We talked about that. We
yeah,
talked about
we
that.
talk,
Like, come
but
on, yo.
and I'll say it's not going to last forever. There'll be a
Right.
pullback. There'll be some sort of scare where people get shook out and all this
Yep.
stuff. We expect that to happen. We don't know when it's going to happen, but when it does happen, we know what we buying.
We know what we're buying. Exactly.
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 So
All right, y'all. Have a good night. We'll talk to you guys on Friday. And if anything comes up, please let us know. Thanks again for watching. Please ask people to subscribe, follow us on Instagram and all the social media, please. So we'll talk to you guys